Hello. Today we are talking about Chapter 12. It's posting to general and subsidiary ledgers. As you can see, we have a list of objectives. Most of them, except for two, have to deal with posting. And if you recall, when we talked about posting earlier in our book or last semester, we talked about taking the amounts that were in the journal and posting them into the general ledger so that we could keep track of the account balances. So that is our main focus, but now we're posting from our special journals as well as our general journal into our ledgers. But we're also going to introduce a couple of new ledgers to you guys. I'm going to talk about those for just a moment. I don't have a slide for it, so you need to listen and make sure you're taking notes on this. So you know that we have a general ledger, and you've heard me talk about subsidiary ledgers. We've started talking about those when we started talking about special journals. If you look on page 219 in your textbook, my headphones are beeping at me, and I don't know why. You will see a copy of Omni Imports. Remember, that's the business we're working as right now, chart of accounts. And if you look in the bottom right-hand corner on page 219, you'll see the subsidiary ledgers. And so we have an accounts receivable ledger, then we have our account numbers, and we have the name of a bunch of companies. Well, if you look, all of the accounts receivable ledgers, those are all customers of ours. Those are all people who owe us money. And if you look at the accounts payable ledger, which those all start with a 2, if you look at the accounts payable ledger, you'll see that those are all people that we owe money to. So those are our vendors. Now, looking at those account numbers with the 2, accounts payable is a liability. It's something that we owe somebody. So if you look over on the left-hand side of this chart of accounts, you'll see the liability section, all of those accounts start with a 2. And if you look at the accounts receivable ledger, those start with a 1. And if you look at the assets, those will start with a 1 as well. Granted, the assets and the liabilities are 4 digits, but for our subsidiary ledgers, we're just using 3 digits instead of 4, which is okay. Now, you may be saying, okay, what is a subsidiary ledger? A subsidiary ledger is just where we keep track of everything that either we owe by vendor, or we keep track of everybody that owes us by customer. And so if we say, okay, how much do we owe to Fiesta Costume at this point in time, we can go pull that ledger or a book, and of course in modern times it's most likely going to be a file on the computer, whether it's an Excel or Peachtree. And so we're going to go look at that and say, okay, currently Fiesta Costumes owes us, and we'll look in this subsidiary ledger and know how much it costs. Now, a subsidiary ledger feeds into a controlling ledger. So we keep all the account balances in the subsidiary ledger by customer or by vendor, and then we add up all of those ledgers all together. So the accounts receivable ledgers, all 6 of those listed on this page, we total those together at the end of the month, and we put that amount into what's called a controlling ledger. And that would be the ledger, if we're looking at accounts receivable, that would be the ledger that falls under assets, and its account number 1130. And then accounts payable, same thing. We add all of those up, and at the end of the month, we're going to post that balance into our accounts payable controlling account, which is 2110 in the liabilities section. So this is a really important concept to understand. And now the subsidiary ledgers are very important that we keep the correct balance, because say that we're keeping track of our accounts receivable and we make a mistake, and instead of putting $50 owed to Keystone Corner, we put $500. Well, we may end up overpaying that customer by $450. So it's really important that we're careful and that we don't make mistakes with this stuff. So we're going to move on to 12-1. This is on page 274 in your textbook. And in case you guys are wondering, yes, it's pre-5 a.m., and so that's why my voice sounds a little bit deeper. So we're on page 12-1, posting to an accounts payable ledger. We have our objectives, which are to define accounting terms related to posting to ledgers, to identify accounting practices related to posting to ledgers, and to post from a purchases journal to an accounts payable ledger. So this is our very first slide in here. As you can see, our objectives are listed at the bottom. We're on page 274 in our textbook in 12-1. And this is an illustration of our subsidiary ledgers going to a controlling account. As you can see, this picture here, these are all of our subsidiary ledgers, right? This is accounts payable. This is each account listed by, this is each customer. This is everybody that we owe money to, so this is each of our vendors, listed in alphabetical order, in numeric order, and there are balances, right? This just shows you what the current balance is. And as you recall, we have columns where we would put that. And so this tape right here, and it's not done on a tape, of course, it's done on a report, shows you, okay, here's Acct I importers, here's its balance, here is African importers, here's its balance, here's Crown Limited, here's the balance, and of course this is what we owe. Added together, we take that amount and we transfer it into the general journal, into the one accounts payable account. As you can see, here's a T account, which we also don't actually have in a general journal, but here's that account number 2110. Here's our accounts payable, and it's a credit because accounts payable is a liability, and we increase the liability with a credit. So that's what they're trying to show you. We use the same process for giving account numbers as we do in the regular ledger, that we put everything in alphabetical order. We space it out by tens. If we wanted to add a vendor between Acct I importers and African importers, we would stick it right between these two, and it would be halfway between 210 and 220. So it would be 215. So ultimately, these balances also affect this amount, but we post here first and then we update this ledger. Okay, so this shows you how to start a new page for vendor and accounts payable ledger. We're assuming that this ledger has been around for a while. So this is a subsidiary ledger page for an accounts payable. So let's look at how this differs from a regular general ledger page. We have the same thing, that instead of having an account title, we have a vendor, right? So we have the same thing, that we have to identify what it is, but this is no longer going to be accounts payable or accounts receivable or assets, or I'm sorry, not assets, cash, which is an asset, but it's going to be the name of our vendor. Our vendor is African importers, and we put our vendor number 220. We get this from a chart of accounts. This is just like the general ledger in that we have an account number. And it's going to be from the chart of accounts. So typically we'll get the vendor information, or when we create a new account for them, from the very first invoice that they send us. So we still have the date. This is the very first line in the page because we're starting a new page. So we have the year, we have the month, we have the day. Because we're carrying this balance over from a new page, we're not saying this is a brand new vendor. We're saying we carried this one over. And you guys have seen this in Chapter 9. We write balance. We put a check mark in a post draft. This tells us that this did not come from anywhere but the previous page, right? It was brought forward, so to say, but we don't use brought forward in the ledgers. We just use that in the journals. And then credit balance. It's a credit balance because it's an accounts payable, and accounts payable typically is only going to be a credit. If you have a debit, it's because you made a grave error, because accounts payable is going to be, the credit balance is going to be increased with a credit, and so we should always have a positive balance. So if you have a debit balance, like I said, it means you made a grave error. It means that somehow you owe people a negative amount of money, which is very strange, especially in accounting. So we don't have a debit balance, though. Usually, like in the general ledger, we have a debit balance column. It would actually be right here, but we don't have one for the accounts payable because it's a credit balance. So this is the process for creating a new page. We write the vendor name, which we either pulled from an invoice, or hopefully we just pulled it from the prior page. We write the vendor number, which is 220. We assigned that when we open an account for this vendor, or we can pull it from the chart of accounts. We write our date. So again, this is the first day of this is the first line in this ledger. So we put our year, we put our month, and then the day. We write balance because this is a balance that we brought over from a prior page. We place a check mark in the post draft column. We write the account balance, right? We didn't have a debit or credit. We just pulled this from another page. So we write the current account balance, which is $5,808.00. Easy enough, right? So posting from a purchases journal to an accounts payable ledger. This is where we actually do our posting. If you recall, the only thing that goes in a purchases journal is when we purchase merchandise on account. So that means that every single transaction in a purchases journal is going to affect an accounts payable account. If you recall, this is what a purchases journal looks like. We're on page 11. We purchased merchandise from Crown Limited. It was on purchase invoice number 83, and it was for $2,039. Now, this is a completed posting. So once we go to post this, we're going to go to Crown Limited's account, because if you remember, what we put in the account credited column is the name of our vendor. It's Crown Limited. So we go to Crown Limited's page in our subsidiary ledger. And first thing we do is we write the date, right? These two dates should match. It's November 2013, because 2014 November hasn't happened. It's the 2nd. We write the journal page number. It's page 11. So remember, what goes in the post ref column of your ledger is the page of the journal you pulled it from. Well, you pulled it from your purchases journal. That's why we have a P. You could also put PJ. And it's page 11. Page 11, right? This is something a lot of you guys missed. I believe it was in chapter 10 that you did not put a post ref and you didn't put a date in your ledger. And you absolutely have to do that every time. You write the credit amount. It was for $20.39. Remember, these columns right here are for the actual transaction, for the actual entry. Was a debit, was a credit. We calculate and write the new account balance. Remember, in our accounts payable subsidiary ledger, it's going to be a credit balance unless you've made an error. So here's our credit balance. It's for $2,039. We got that because this is a brand new vendor. We created Crown Limited. We had no balance. This was a blank page. We took a 0 credit, we added $20.39, and now we have a new credit of $20.39. And the very last thing that we do is we go back to the journal, and in the post ref column, we write the vendor number, which we pull from right here in the upper right-hand corner of our subsidiary ledger. So we put it right here in the post ref, and then we are finished posting from a purchase journal to an accounts payable journal. So, and it's going to end this video here because next is 12-2.